Welcome back to Investing Talk Podcast. Today, we're putting SoundHound AI under the microscope. It's a name that's been making some serious waves in conversational AI. And the big question, the one we keep hearing is now actually a good time to buy? Before we get into it, just a quick request. If you find these talks helpful, please hit subscribe, like the episode, maybe leave us a comment. Oh, and if there's a company you want us to look into next time, definitely drop it in the comments below. We've pulled together all the key reports, analyses, really dug into it to give you a clear picture of what's driving SoundHound AI and, the potential opportunities and challenges ahead.
Yeah, it's a great one to look at because SoundHound AI, it really exemplifies that dynamic, sometimes wild ride you see with growth stocks in these high-tech sectors. We're going to unpack its recent journey, take a hard look at its financial health, market sentiment, try to give you a really comprehensive understanding.
Absolutely. And I think to really get a feel for SoundHound AI today, we need to look at the whirlwind it's been through recently. Let's maybe start by tracing things back over the last 3 months or so, July, August, September 2025. So if we rewind to July, the stock was definitely starting to wake up. You saw trading volume, price action. It really started ramping up ahead of their earnings.
Right. There's anticipation building.
Exactly.
Yeah.
And the company's 52-week range started expanding. Technicals were kind of hinting at upside potential. There was this growing optimism, too, especially around potential international expansion. You heard whispers about Korea, Japan, Germany.
Oh, following the broader AI trend, too, right?
Yeah, the share price was climbing steadily, definitely riding that bigger AI sector wave.
And then August hit. Boom. August 7th, Q2 earnings. And they were, blockbusters. They were.
Really? What were the numbers like?
$42.7 million in revenue. That's up, get this, 217% year over year. And they beat EPS expectations easily.
Wow, okay, 217%.
Yeah. So the stock immediately jumped, like 26% rally right after. Wall Street analysts, they quickly upgraded price targets. They were citing, faster adoption of conversational AI and cars, IoT, consumer electronics.
So the narrative was really strong then.
Super strong. The stock hit nearly $14, then even pushed towards $24 before the volatility kicked back in.
Huh.
We also saw a big jump in trading volumes and, interestingly, a lot more institutional investor activity after that report, big money notice.
Okay, so huge August. But then September, sounds like things got a bit more complicated.
Yeah, September brought more nuance, definitely. You had firms like D.A. Davidson raising price targets, sort of acknowledging the August momentum.
Yeah.
Stock saw heavy trading, held a strong short-term uptrend for a bit, even after a dip.
But that.
That valuation volatility we mentioned, it stuck around, shares pulled back from those highs, profit-taking started, and those underlying concerns about negative margins, the high valuation, they resurfaced. It became a real tug of war.
Highlighting the risk and opportunities side by side.
Exactly. September really showed that tightrope walk high-growth companies often face. Amazing potential, but always that market scrutiny on profits and price.
Makes sense. Okay, so that's the recent past. What about the immediate future? What catalysts are on the horizon, say, the next 3 months, maybe looking into early 26?
Okay, yeah, some key dates for you to watch. First up, October 25th, 2025, that's Q3 earnings.
Always a big one. What are the expectations?
Expectations are pretty high. Analysts are forecasting continued strong top-line growth. The consensus is looking for almost 60%, 59.8% year-over-year growth. But everyone's going to be laser-focused on margins and how that international adoption is actually progressing.
Right. Can they keep growing and improve profitability? An upside surprise there could definitely fuel another rally.
For sure. These earnings are critical inflection points. Then, looking at November 15th, 2025, S&P and other ETF rebalancing.
The rebalancing. Why is that significant here?
Well, given SoundHound AI's big run-up in market cap and its inclusion in various AI and tech ETFs, these rebalances can cause volatility. Passive fans have to buy or sell based on the index changes, regardless of fundamentals sometimes, so it can move the stock.
Got it. Something to be aware of. What else?
Heading towards year-end, December 3rd, 2025, that's typically an institutional buy-sell window. Mutual funds adjusting portfolios before closing the books for the year. That can amplify moves in stocks like this.
Okay. And then early next year.
January 31st, 2026, we should get the preliminary Q4 2025 results guide. That gives an early signal on how the year finished and sets the tone for 2026.
So quite a few scheduled events. But what about the unscheduled stuff? The rumors, the speculation that often moves these stocks too.
Oh, absolutely. And there's plenty of buzz around SoundHound AI. Persistent rumors about a major contract, maybe with a top global car maker, full vehicle voice integration.
Wow, that would be huge. A game changer, potentially.
Potentially, yes. Then there are reports circulating about a possible white label deal, maybe with a big smart home device company, using their Houndify tech.
Getting into smart homes. Interesting.
And that international angle we talked about, speculation's rising there too, a strategic partnership, maybe a licensing deal in Asia, Korea or Japan often get mentioned.
So lots of potential growth avenues being talked about.
Definitely. And, inevitably the acquisition talk surfaces. Some sources suggest bigger tech firms might be sniffing around looking at SoundHound AI as a target.
Always the case with innovative smaller companies.
Yeah.
It highlights the potential upside, but also the uncertainty, right? These things might not happen.
Exactly. High stakes, high potential reward, but also high risk if these deals don't materialize.
Okay, let's shift from possibilities to, well, the reality on the ground. Let's dig into the fundamentals. Revenue and earnings first.
Sure. So for the full year 2024, they reported about $74.7 million in revenue. That was a big jump from $47.5 million in 2023. Strong organic growth, plus the impact of those acquisitions they made in 24 SY and Q3 and Amelia Holdings.
Okay, impressive top-line growth, but what about the bottom line?
Yeah, that's the catch. Despite the revenue surge, the company is still unprofitable. Net losses actually increased.
Why is that?
High R&D spending, which you expect in this space, but also significant acquisition-related expenses. Management guides for more revenue growth in 2025, partly from those acquisitions contributing for a full year, but those gross margins still under pressure.
So growing fast, but spending a lot to do it. What about overall financial health? Cash, debt.
As of early September 2025, after buying Interactions, they reported having over $270 million in cash, and they state they have no debt.
Okay, $270 million cash, no debt. That sounds pretty solid.
It provides a cushion, definitely. But, and this is important, free cash flow is still negative. They're burning cash.
Meaning spending more than they bring in from operations.
Precisely. Driven by that heavy R&D and the M&A activity. Near-term profitability just isn't visible yet. And remember that delayed 10K filing, their annual report. It means we don't have the absolute latest cash flow specifics, but historically, it's been negative.
Right. That delayed filing is a concern we need to come back to. How long can they sustain that burn rate without positive cash flow? It's a key question.
It really is.
Okay, what about where they fit in the market? Their competitive position.
They're definitely a recognized player in conversational AI, especially strong in automotive voice solutions. They've got enterprise clients too, and now with the acquisitions, they're pushing into omni-channel interaction.
What gives them an edge?
Their patent library in voice AI is quite extensive, and they have a pretty broad portfolio of automotive partners. Those are real differentiators in certain areas.
But the competition must be intense.
Oh, it's brutal. You've got the giants, Google, Amazon, Microsoft with incredibly deep pockets, plus newer specialized players popping up. And while the acquisitions broaden their reach, they also bring massive integration risk. Making those acquired companies work seamlessly together, that's a huge challenge.
Yeah, integration risk is often underestimated. Okay, let's switch gears to the technicals. What's the chart telling us recently? Price action levels.
Sure. So over the last month, the stock's been trading between roughly $13.40 and $17.20. Closed around $14.05 on September 10th. We're seeing key support where buyers tend to step in around that $13 to $13.50.
And resistance, where sellers seem to cap the price.
That looks to be around $16.75 to $17.20.
So what's the short-term trend look like based on that?
It's kind of neutral to maybe weekly bullish right now. It bounced off its recent lows, but it's still below the summer highs we saw after the earnings beat. The 50-day moving average, a shorter-term trend line, is near $15.10. That's above the longer-term 200-day, which is around $13.30. Technically, that's usually seen as bullish, but the price action is still really volatile, prone to big swings, especially on news. Momentum indicators like RSI haven't shown extreme overbought or oversold levels recently. The MACD indicator is kind of flat.
So the chart suggests it's waiting for something, a catalyst to pick a direction.
Pretty much, yeah. It seems coiled, waiting for the next major piece of news or data point.
Okay, speaking of news, let's talk recent headlines and sentiment. The Interactions acquisition was a big one, right? September 3rd.
Yeah, $60 million deal, significantly expands their addressable market, boosts their enterprise voice offerings, opens up new doors, theoretically.
Theoretically.
Right.
But you mentioned the delayed 10K filing earlier. That seems connected.
It is, and it's a significant concern. The ongoing accounting integration challenges from prior acquisitions are why the 10K is delayed. And crucially, the company itself has repeatedly identified material weaknesses in internal control over financial reporting.
Okay, material weakness. That sounds serious. What does that mean for an investor?
It's a red flag. It means there are fundamental problems in how they track and report their finances and how they safeguard assets. It increases compliance risk, transparency risk. It's just not something you want to see persist.
No, definitely not. And yet, despite that and the delay, you said analyst ratings are mostly hold. Why not more bearish?
That's a great question. It seems analysts are balancing the aggressive growth and M&A story against these very real operational and financial control issues. The ratings are mixed, reflecting that uncertainty. There isn't strong conviction either way from the consensus.
What about insiders? Are they buying?
Well, Form 4 filings show a large restricted stock grant to a key exec back in August. But in terms of open market buying, no notable insider buys recently.
Lack of insider buying can be telling. What's the general vibe? Sentiment?
On social media and forums, sentiment seems to have grown more cautious lately. People are picking up on the 10K delay, the acquisition risks, but you still see strong optimism among dedicated AI investor groups. They're focused more on the long-term tech story, so a bit of a split view out there.
Okay, so summing up catalysts again short term, what are the absolute key things to watch?
Number 1, filing that 2024 10K, still expected this month, September. That could clear up a lot of uncertainty. Number 2, the next earnings call. We need updates on how the interactions and Amelia integrations are going. Any initial synergy metrics? Are they making progress?
And long term?
Long term, it's about execution. Can they expand those automotive and enterprise deals with new integrated products? Will the overall market for conversational AI accelerate? And always, competition remains fierce. Future M&A could happen, but again, that brings integration risk. It's a double-edged sword.
Right. Let's explicitly lay out the risks. Stock-specific risks first.
Okay. The ongoing 10K delay and those persistent material weaknesses, huge compliance and transparency risks right there. Then the sheer complexity of integrating 3 major acquisitions interactions, SYN Q3, Amelia. It could disrupt operations, increase costs, delay the benefits they expect.
And the financial side.
Sustained negative cash flow. No clear path yet to GAAP profitability. That raises the risk they might need more funding down the line, potentially diluting existing shareholders.
Okay, those are company-specific. What about broader market risks?
Well, competition, as we said. Deep-pocketed tech giants. Rapid AI innovation means they need to constantly stay ahead. Do they have strong enough moats, unique advantages? That's debatable. And importantly, this stock and the whole AI sector are very momentum-driven, highly sensitive to market sentiment. In a risk-off environment, when investors get cautious, these small-cap AI stocks with high multiples can get hit hard and fast.
A lot to weigh there. So after filtering all this information, the growth, the tech, the risks, the financials, what's the final assessment, the bottom line?
Our overall rating comes out to a 4 out of 10.
Okay, a 410. Explain the thinking there.
Look, SoundHound AI definitely gives you unique exposure to conversational AI. They've been aggressive, built scale through M&A. That's the positive. However, that potential is seriously tempered by the continued losses, those persistent material weaknesses in financial controls, the delayed annual report that's still not filed, and significant integration risk.
So the execution risk is very high right now.
Extremely high. And while that $270 million cash buffer helps, the lack of profitability, the lack of recent insider buying, and just the overall uncertainty around execution, it really justifies a below-average rating at this point.
So who is this stock potentially suitable for then?
Given the high risk-reward profile, it leans much more towards short-term trading for experienced investors. People looking to play specific events like that 10K filing or news on the mergers. It is definitely not suitable for conservative, long-term investors right now, not until they stabilize the GAAP financials and significantly reduce that execution risk.
Okay, so we've journeyed through the rapid growth, the strategic acquisitions, but also the very real challenges and question marks facing SoundHound AI. It's clear, isn't it? This isn't a simple yes or no for investors. It's complex, it's dynamic, a lot is still playing out.
Yeah, zooming out, the analysis points to a company with exciting tech potential, no doubt, but also facing significant hurdles. That 4 out of 10 rating really sums it up. There might be opportunities, but they come packaged with substantial risk, making it suitable only for very specific strategies right now.
What really stands out to me from this whole discussion is just how critical it is to look past the exciting headlines, especially in AI. You have to dig into the full financial picture, the operational reality.
Understand the plumbing behind the promise.
Exactly. Which leads to a bigger question, really, for you, the listener.
When does the promise of future tech outweigh current financial instability and these operational risks? How do you personally weigh explosive growth against, say, profitability and solid internal controls, especially when so much relies on future potential rather than present performance?
That's a really powerful thought to leave you with. Understanding those trade-offs is just so key to making informed choices, not just with this stock, but in any market. Thank you for exploring SoundHound AI with us today.